I look up to when it comes to trading, when it comes to, going out there and really going out there and inspiring people when it comes to the trading side, guys. So real quick story on, Justin Saini. Justin, he's been trading for over 4 years. And it's crazy. I remember him like blowing accounts and doing all this crazy stuff when he was just getting started. And he was actually one of the pioneers with being involved with the entire IM platform. And it's crazy now to see his entire growth, because now he has his own app with IM now, which is called Steady. He partnered up with John Dollery for that. I mean, it's insane. I've seen Justin, hit a chairman 10 level of making over 10 grand a month, with the marketing side. But on top of that, he's also been able to, hit a multiple, I don't even want to say income, because I don't want to like talk about all the money, but this guy, I've seen him make, chairman 50 money, chairman 100 money when it comes to trading. Okay. So it's been absolutely insane. We got literally one of the best traders on here for you guys to kind of share a little bit of his nuggets, some tips and value for like maybe the newest trader, and then also somebody that's been involved for quite a while, that could always, learn a little bit more and get tips real quick. So other than that, I'm going to kind of step away from greatness, guys, and I'm going to give it up to Mr. Justin Saini. You guys are on the call tonight, right? Starboy, drop some 777s in the chat. Okay, for Mr. Starboy. Justin, I'm going to make you co-host, bro. I appreciate you, dude. Super grateful for you, man. And yeah, let's run it up. Let's just drop some heat tonight, guys, for him. Take it away for us, Justin. Take it away.
Yo, what's going on, guys? Super excited to be here. John, thank you for that lovely introduction. Yo, guys, real quick, let's go ahead and drop some sevens in the chat for the man, John. It's crazy. John's been one of my friends for the past almost 5 years now. I'm gonna tell you guys a little bit about John before we get started. Yo, we were so broke when we first started this journey. And John flew from Connecticut to Dallas. He had somebody split his flight with him. So he was coming to meet one of our other friends, Jordan. Jordan had to pay for half this man's flight. And he came to meet us to talk to us and close us, like myself and my sponsors. And I remember we went to a Chicken Express, right? And yo, none of us had any money. And John had this, he had like $10 to his name. And this dude bought us food, and he didn't even eat himself that day. And I remember ever since that day, the friendship was built, not necessarily off the food or anything like that, but just built off of the actions and the love. So John, I appreciate you, bro. You guys see John today as, a 7-figure earner, but you guys didn't see John when he was wearing the same tank top almost every day, right? Yo, John, you remember those days, bro?
Yeah, bro. It's dumb funny, dude.
Yeah. All right, guys. Yo, we're going to go ahead and hop into the charts. I want to John said I have about 45 minutes with y'all, so I'm about to go ham for 45 minutes. I want to change the perspective of the way we're thinking. So I'm going to teach you guys how you can always kind of consistently stay profitable. So let's go ahead and hop into the charts. Give me one sec. Yo, John, I just sent you a text.
You're good, bro. You're good.
So check this out, guys.
You have to for like a minute or two.
You said what?
Nothing. Never mind.
All right, cool. So what I want to kind of talk about, guys, is this. So before we get into charts and strategies and stuff like that, you guys really need to understand risk to reward, right? And if you can understand this, then you could be a profitable trader. Because a lot of us, when we're trading, what do we focus on? We focus on the amount of pips we're going to catch or the amount of money that we're going to make, right? So when you're trading, if you're focusing on the amount of pips or the money, drop a 5 in the chat. If your main focus when you're trading is catching a lot of pips or making a lot of money, put a 5 in the chat. If that's what you're kind of focused in when you're trading. There's nothing wrong with if you're a 5, right? Nothing wrong with that whatsoever. Like, we all want to make money. We all want to get to the bag. We all want to live a certain type of quality of lifestyle, right? Now, what happens, guys, and I appreciate y'all for participating. What happens is most of the time people focus on money and we'll put money slash pips. They focus on the money and the pips more than they focus on the risk to reward, right? So usually this is what people are focused on. And this is the reason why most people fail at trading, right? What you got to do is you got to shift the perspective to focusing on your risk to reward, and not only your risk to reward, but percentage-based risk to reward, right? Now, this might seem a little bit boring at first because I'm going to kind of give you guys a math lesson, but I promise you this math lesson that I'm about to give you guys will change your trading forever. So if you guys are ready, I hope you got your notebooks out. Hope you guys are ready to take some notes, right? All right, perfect. So check this out. You as a trader, and this is just me speaking in general, right? So you as a trader, when you start trading, you might not be that good, right? You might be a 30% accuracy trader, right? 30% accurate. What does that mean? That means you're winning 3 out of 10 trades. Win 3, lose 7, right? And this is just being realistic. Think about you and your trading. Out of the 10 trades that you take, how many are you actually winning, right? For most people, you're going to start out your Forex career and you're going to be a 3 out of 10 trader. You're going to be 30% accurate, right? Now, the reason why risk to reward is so important is because of these 3 examples I'm about to give you guys. So some people focus on the pips, which is fine. Some people focus on the money that they're making, which is fine. But when we focused on percentage-based risk to reward, so I'm going to type that again, percentage-based RR, right? This is the key thing. We'll change this to something else. Let's do this. Blue, bet. Percentage-based RR. So RR is risk to reward. I'll put a little thing here so you guys know. So percentage-based risk to reward. So let's say this is a 1-to-1. Let's put this at 1-to-2. And then we could put this to 1-to-3. Perfect. Now let's factor this in. If you're a trader and you're trading and you're only 30% accurate, that means you lose 7 trades and you win 3 out of the 10. So factor this in. If you're trading at a 1-to-1, let's factor this in. Let's say every trade you take, based on your trading plan, you should be trading percentage-based risk reward, right? It shouldn't be, okay, 25 pips every time. All that stuff is honestly garbage. If you want to become a professional trader and really free yourself financially through this market, it needs to be percentage-based. So let's say you're the type of trader who takes 1%. Me personally, I'm doing 1% trades. That's what I do. Every time I take a trade, it's 1%. Okay, you're risking 1%. So if you're trading 1-to-1, that means you're risking 1% to gain 1%. So on your 3 wins, it's plus 3%, right? On your 7 losses out of the 10, you're doing minus 7%. So your total at the end of those 10 trades is minus 4% overall, right? And this is if you're trading at a 1-to-3, right? Now, let's say we're using 1% risk every time. So out of the 3 trades you're winning as a 30% accuracy trader, you're still going to be negative 4% on those 10 trades. Now let's say 1-to-2. You're risking 1%, but you're gaining 2%, right? Okay. Well, on the 3 trades you win, 3 trades at 2% each is plus 6%, right? And the 7 trades you lose, minus 7%, right? Your total equals, your total is minus 1%, right? Is this making sense, guys? Are you following the math? It's a 1-to-1. I'm risking 46 pips to gain 46. I'm risking 23 pips to gain 46, right? So this is let me label these out. This is 1-to-1. This is 1-to-2. And then this last one is 1-to-3. Cool. The last thing is 1-to-3. So at 1-to-3, let's do this again. We have 3 wins, right? We're risking 1% to gain 3. So at the 3 wins, you just gained 9%, right? On your 7 losses, you lost 7%. So you're positive plus 2%. So you end up in a positive, right? Now, what I want you guys to realize is you and your trading, obviously, I don't know you guys personally. But what I can tell you is based on years of experience and being able to mentor thousands of people, majority of people, whether you like it or not, you're going to start here. You're going to start here. It is what it is. Nobody's 100% from the free throw line right off the rip, right? So you as a trader, we're going to take losses. But you got to factor this in. Even if you're a terrible trader, right? And I'm not saying you, but I'm saying statistics-wise, even if you're a terrible trader, what I'm showing you is how you can still be in profit. You guys want to do a minimum of 1 to 3. You don't want to take a trade unless you know that your first take profit is a 1 to 3, right? And this is what's going to keep you profitable, and this is what's going to make you money in this market. Because like I said, you're not going to start off being a high accuracy trader. You're going to be a low accuracy trader off the beginning. But as you consistently start growing, your accuracy is going to start to grow as well. So let's factor this in. Let's change this to now you're a 40% accuracy trader, right? You're winning 4 out of 10 trades, right? You win 4, you lose 6. Let's look at the difference in the numbers, right? I'm going to change these numbers. All right, 1 for 1, it's plus 4%, minus 6%. Your end total is still, your end gain is minus 2%, right? And that's going to be if you're still trading at 1 to 1. Now let's say you're trading at 1 to 2 and you're a 40% accuracy trader. You could win 4 out of 10 trades. So 4 times 2 is 8, so plus 8%. You lose 6, minus 6%. Your total is 2% positive, right? Whoops, 2% positive, right? And let's see at 1 to 3. At 1 to 3, all right, so you're risking 1% to gain 3. So 3 times the 4, you're gaining 12%, minus your losses, minus the 6 trades, minus 6%. Your total is still plus 6% gain, right? So you got to factor this in. You as a trader starting this business out, you might not be very accurate. You might be a 30% or 40% accurate trader, but that doesn't mean that you can't make money. The thing is 1 to 1 is terrible, right? I'm gonna be honest with you guys. 1 to 1 is always gonna be terrible. 1 to 2 is honestly terrible too. The bare minimum you should ever look for is 1 to 3, right? I like to go bare minimum 1 to 7. The trades I'm looking to take are a 1 to 7, right? And what I want you guys to start doing is go ahead and start journaling. Okay, if you guys, I mean, this is being recorded, so he'll share the recording with you guys. But journaling is huge too. Journaling, right? When it comes to journaling, there's so many different ways you can do it. But this is what I want you to understand. Let's do this. I'm gonna share some ideas with you guys from Steady. So let's factor this in. I'm gonna share some of the trades that I actually sent. So here's USD CAD. This USD CAD trade is a 1%. It was like a 14 to 15 pip stop loss with 171 pip TP. It was a 1 to 11.86. It was 11 to 11.86 to 1 risk to reward ratio. Now, what does that really mean, guys? It means simply this. When we're trading, you guys want to have a trading plan built around percentage-based risk, whether it's 1%, 2%, 3%, whatever it might be. Now, factor this in. This trade here is going to generate me. Check this out. Let's do some basic math real quick. When we're trading at higher risk to reward ratios, when you win a trade, you're winning big, right? Think about this. Think about your account size, and you can do the math on your own account. But when we're winning big, right? So let's just do this. Here's a W, and there's your L. So let's say I win my trade, right? Okay, well, I'm plus 11.86% gain. Let's say on the next trade, I lose. Okay, if I lost, I only lose 1%. Does that make sense? Let's say the next trade was a 1 to 7. I won the next trade. Plus 7%. All right, let's say the next two trades are both losers. Even though I'm losing, I'm not actually losing any money. Does that make sense? Hopefully this is following along. When you guys start, thank you for this. Stay steady with your, yeah, for facts. So when you guys are focusing in on these trades this way, you guys have an opportunity to not only really make a lot of money, but to let me see if I can refresh this. Not only to make money, but you can consistently stay profitable even in times where you're losing, right? Here's another trade we sent out. I sold a GJ right around here. The stop was right there, 16 pips. TP was 225 pips, right around here, right? So this was a 1 to 14 risk reward trade. This happened last week. When it came down to this trade, you got to factor that in. If I lost this trade, I'm only losing 1% of my account. If I win this trade, I'm making 14%. So let's say this. Let's say we're trading with a $500 account size, $500, right? Let's say we're risking, let's say the max I'm ever willing to go is 3%, right? So 1% of, let's do some quick math. And if you're not really good at math, here's a tip. You can go to my FX book -forex calculator / position sizing. What you're going to do is you're going to come in, type in your account size. So 500, let's say we're risking 3% of our account. We're trading GBP JPY. And then our stop loss is 15 pips. So you can come in here, you can type this in, and it'll do all the hard work for you. You're risking $15. If you're really nerdy about trading, there's the units. And this is the lot size you should be trading at 0.1, right? Or at 0.11 if you want to really round it up, right? So factor this in. I'm risking $15 on this trade. So my risk is $15, but my gain, since it's a 14.35, whatever I'm risking, I'm gaining 14 times as much, 14.35 times 15. I'm gaining $215.25. So you got to factor that. I risked 3% of my account, but I gained 43% of my account. We can look at it as, we can look at this as here's my balance, there's my risk. I risked, my dollar amount was 15, my dollar amount gain was 215, but my risk was 3%, my gain was 43%, right? So you got to factor this in, guys. Your account, don't worry about where your account is today, but worry about where your account's going to be tomorrow, right? Let's say one day you're trading with a $25,000 account, right? 3% of that, 25,000 times 3% is going to be 750, right? Think about risking $750 on a 15 pip stop, right? $25,000, right? You're going to be trading at a 5.38 lot size. You're making $53 a pip, right? So you got to think, risking 3% there, which is a 750 pip stop loss for, 750 times 14.35. That's risking $750 for a gain of $10,762, which is the same thing. It's percentages. Don't worry about the money. If you guys worry about the money, you're never going to make any money. If you start focusing on the percentages, you're going to watch your account grow, not just grow, but grow aggressively, right? So I guess that's kind of like the math lesson for today, right? How do you go about applying this, marking the charts? Like, how do you know when you're going to make the 7%? Like this. Okay, so here's a trade we gave out on Go Live. So here's the setup, right? There's our entry. And I'll break this down and stuff here as well. But when I'm taking this trade, I have my stop loss where I want it. And then it says right here, risk to reward ratio. So if I'm trading out of 1 to think about this, you got to factor in never risk more than 3% on any given trade. I would say what you should do is you should start risking 1% and then scale it up to 2% after so many trades, and scale it up to 3%. But let's say the target that we have on this trade right now is down here, right? I'm risking 16 pips to make 147, which is fine, but my real target is my risk to reward ratio, right? Now, on today's session, we actually called out a re-entry on this trade, which was here. Cool. And I'll talk about this more in depth and stuff like that. But when it comes down to how we're trading, guys, there's a few key things that we can do. And when we apply these few key things and we work with these few key things, we're able to take you could take the same trade and take it from a 16 pip stop to a 3 pip stop. And when you do this, your risk to reward goes through the roof, right? One of the best trades I've been able to take so far is a 1 to 74, right? So whatever you're risking, you gain 74 times. On this example, on the higher time frame analysis, it's the same trade, same target, almost the same amount of pips, but the percentages are a lot different. So you got to start. But do you risk this much on indices, Bitcoin, and gold? Yeah, I don't really trade US 30 like that. I don't really trade Bitcoin like that. I don't really trade gold like that. But you could definitely apply these principles, right? But what you guys want to take away from this is when you focus on percentage-based risk reward, like I said, now not only are you making money, but you're consistently staying afloat. You're staying profitable. Even if you take a bunch of losses in a row, I showed you guys how you can lose 7 trades and win 3 and still be profitable, right? But you have to be consistent with those setups. Right now, I mean, Euro USD's already left the station. The only trades I'm really looking at right now are that. GBP USD also has already kind of left the station. You know, I think might come back down to like, you know, this area here. But these trades have already left the station. I don't have anything right now specifically to give you guys in the sense of trades, but we can look at some charts and talk about them and stuff like that. Let's see. Give me one sec. I'm just trying to catch up with the chat. Okay, for those of you who don't, I saw a question about Steady. For those of you who don't know how to access Steady, I'll kind of walk you through it. So there's 2 ways of accessing it. You can go to steady.im and access it, or you can go to IM Academy, go to the strategies tab, click Steady, and then click there and you're in. Truthfully, right now, we're actually updating the entire, we've been doing so good on, the results on Steady have been so, you know, wonderful that we're actually redoing the whole back end of the website. We're upgrading everything. We're going to make it nice and smooth and so on and so forth. Right now, what I do want you guys to do is make sure you're in the Steady Telegram. So the Steady Telegram is going to be the corporate Telegram that we have. I'm going to drop it in the chat. The corporate Telegram, boom, it's like a 70% accuracy when it comes down to Steady. It's like 74. I'm not exactly sure. I haven't ran the numbers lately. But it doesn't, the wins to losses don't matter, right? And this is why the wins to losses don't matter. It's because when we win, here's a trade I gave on Steady. When we win, the entry was like right here. When we win a trade, we're catching a very large movement that's going to pay you out a very big percentage. Does that make sense? So once again, factor this in. Even on Steady, we're going to take losses. The losses don't matter. They truthfully do not matter, right? And the quicker you guys can understand that, the quicker your trading will be a lot more successful. The losses don't matter. It's all about your win and your losses, yeah. But when you're trading percentage-based risk to reward, if I catch a setup where I'm gaining 12%, and then I turn around, I'd have to lose 12 trades to get down because of my risk to reward understanding. Does that make sense? Hopefully that's making sense. Would you secondary re-entry setup have more to do with the structure on the institutional concepts? Yes. What do the color indicators on steady next to each trade mean? It means sell and buy. Sell, buy. Sell, buy. Simple as that. Is Steady Swift going to be included if you already purchased Steady? No, it's going to be an add-on. So Steady Swift is going to be trades like the one I just showed you on Euro USD. So what Steady Swift is going to, so normal Steady is mainly built around swing trading, right? Steady Swift is going to be, so let's say this. If I called out this trade on Steady and it was a 1 to 16, or if it was a 1 to 10, Steady Swift is going to be trades that are going to come in on the lower time frame. They're going to give you a 5 to 10, maybe a 15 pip stop like this one. This was a 3 pip stop. And what's going to happen is your risk to reward is going to be even greater. Does this make sense? So normal Steady, you're going to have swings. Steady Swift, you're going to have much larger potential for risk to reward. Even if we took this above the high here, this is still a 1 to 17, which is freaking insane, right? So the takeaway from this is having the best risk. So Steady Swift is going to be trades where your risk reward is going to be through the roof because of the lower time frame re-entry analysis. Hopefully that makes sense. The fib settings. So there's two fibs. There's this fib to measure institutional concepts, and then there's this fib to measure trends. Now, let me check my notes. John wanted me to go over a few key things with you guys. So I talked about risk to reward. I'm gonna talk about mindset and the long-term trading. You got to realize this: if you don't have a trading plan, you're going to fail, right? Trading plan. So trading plan means what time of day are you trading? This is very basic. What pairs do you trade? What minimum RR are you going for, right? What's the minimum risk reward? Hold on, let me, I can't spell. So what risk reward? Always place a stop. How are you feeling at the time of your trade? You factor your emotions in. What's the trend / structure looking like, right? Your psychology. I can't spell, so hopefully, that's wrong. But your psych, your trade management. So how are you managing your trade, right? There's so many different things that can factor in. What type of trade, is it a sponsorship candle / point of entry trade, an institutional candle, whatever you want to say? Is it a continuation? Is it a reversal? Is it a schematic imbalance? Like, what type of trade are you trading, right? So like in your plan, you need to have a plan. And this by no means should be your plan. This is just random stuff that I'm just saying off the top of my head. These are things that, I would say that are kind of good. Like, I like to trade during New York session. Truthfully, I like the New York session to London cross. Man, this trade's going crazy. I like the New York session to London cross. I like a few different things, but what I want you to take away from this is you need to have a plan and set. This doesn't have to be your full plan, but for you to be a long-term trader and for you to actually be able to withdraw 6 figures from this market, there has to be a plan. If you fail to plan, you plan to fail, right? And as cliche and corny as that sounds, like, it's just facts, you got to have a plan. You got to be growing. You got to be doing personal development. You got to be doing all these things, because the more you're able to make through the market, the easier it is for you to build your business, right? And the more income you have from building your business, the easier your trading is going to be. Like, you got to factor this in. Yo, John's a Chairman 50. You think John is worried about losing, a $600 trade? He's definitely not. He doesn't have to trade with fear of loss because he has income coming in, right? But the next thing I want to talk about is just structure. cool. So I'm just going to go ahead and remove all this. We'll talk about structure. All structure is, guys, is just understanding that the market's doing this. It's going up and it's going down, right? In an uptrend, all that matters is price is just making higher lows. That's all that matters. In a downtrend, all that matters is price is making lower highs. That's all that matters, right? An uptrend becomes a downtrend when the last higher low gets taken out. Price will pull back and then it'll start trending down. A downtrend becomes the uptrend when the last lower high gets taken out. Price will pull back and start going up. That's literally the lesson on structure. So now let's apply this to some charts, and I'll explain why we took trades the way we did. All right, cool. So I'll explain this Euro USD trade. This Euro USD trade is based off of the fact that, it's based off the fact that there was some type of liquidity that was up above these highs, right? There was some stop losses, there was orders here, there was this big wick, and then it moved down. What you want to do is you want to surf through all the time frames, and you want to see what time frame is this candle the biggest candle compared to body versus wick. For me, I found that on the 1 hour. So what am I doing? Here's the candle that I'm highlighting. I'm going to measure from the body to the body. I'm going to change my fib settings, and I'm going to fib it out. Now, when I do that, we see price reacted off that area, right? Now, there's a few other things that kind of come into play. Volume is very big, and people sleep on volume. So I'm going to explain to you guys how volume works. So the same way you have divergence in the market is the same way you have divergence in the charts in the sense of volume. So we can say that price made a higher high, and then it made a higher high, right? The angle of that. When we look at things like our MACD, we see on the MACD that price is actually, see how this is going down? It's showing that the strength is dropping in the market when price is actually going higher. That's one indication of a big drop coming. Another indication is volume-based divergence. What I want you guys to factor in is this. Here's this big green candle, and here's the next candle, that last candle up. Notice this, guys. See how price is going higher? So you would think more bullish volume is entering the market for price to go higher. But what do we actually see? We see the bullish volume leaving the market or diminishing. That's a good indication that this is an actual institutional sponsorship, point of entry candle, point of interest, right? Now, let's factor in what's happening over here. Same thing. We're seeing price is going higher. But we're seeing on the MACD, the price is actually diverging, right? We're seeing here that we had a big push. Whoops, what the hell is that? We're seeing, what was that? How did I get there? Oh, cross line, I never even seen that. We're seeing that bullish volume started to enter the market, and it started to rally, but it slowly started to diminish. Diminish means to exit, to leave, to slow down. It's going down, right? So that's another, point of our trade. Now, this is a trade that we discussed Sunday. On Sunday, we discussed this, but I actually missed the original entry, right? Because I wasn't paying attention. It's okay if you don't pay attention. But what did I do is I scaled in. There was that last candle up before the move down. There was the next candle up before the move down. I measured out this candle, and boom, we took that at the 50%, and now we're off, right? So you don't even have to catch a lot of pips. You just have to be able to catch these risk reward setups. What I want you guys to realize is on the higher time frame, there might be a setup, and the setup hits your point of entry, and then it starts to drop, and you think it missed. If you scale into the lower time frame, there's going to be a new point of entry. If this trade is actually going to go in the direction you want it to go, it'll scale back, and you'll hit something within this area, and you can get another entry. And instead of having a stop loss up here, you can have your stop loss right there, your new entry here, and then you're just making a ton of money, right? Hopefully that makes sense. I'm going to check the chat out real quick. Is Steady Swift is free right now, but normal Steady is $22 a month. You can add Steady to you can add Steady to your shopping cart in IM Academy. Go into your back office, add Steady. It's $22 a month. I promise you, one trade will pay for that $22 for the year. Let's see this. What time frame do you use though? You guys see all these time frames up here? I use all these time frames. There's no one time frame. Price. You guys got to understand that there's a relationship between price on the right-hand side of the chart and then time at the bottom axis. You got to realize that price doesn't know time. Time doesn't know price. They're one and the same, right? So the thing I'm looking at on the 1 hour is the same thing on the 4 hour, but it's all laid out. How do you lay out your time frame like that instead of the drop down menu? You put stars next to them. Put stars next to them. I'm sure you guys. I don't want to waste too much time explaining how TradingView works, but you guys can. There's TradingView tutorials where you can learn all the tips and tricks. Definitely do that. On the MACD, the settings are this. You're going to go to inputs. You're going to do 3, 10, close, 16. Honestly, neither of these matter. You can just cut both of those off. And then you're going to go to style. On style, you need histogram is going to be checked. You need to uncheck histogram. MACD needs to be turned on. And then off to the right of the MACD, the histogram needs to be on there. These are actually Christopher Terry settings for the MACD. Cool. Let's keep going. This is blessed though. What are your favorite confirmations, if there are any you haven't mentioned? I like to take trades off of here's kind of like my confirmations: trend / structure, right? Institutional candle / sponsorship candle / point of entry, doesn't matter what you call it. Imbalance is cool. I like divergence. I like volume divergence. Continuations of the trend. Multiple time frame confluence, multi time frame confluence, right? Those are some of the things that I like. Now, really what those mean is this. Trend and structure is just knowing where you're at, right? Institutional sponsorship candles are things like this. An imbalance is like a void between the wicks. Divergence is like when the MACD is going down, but this is going up. Volume divergence is when price is going higher, but the volume is actually exiting the market. Continuations are like when you're taking it. Let's say I missed the buy here. I could have found opportunities to buy on the lower time frames there. Do you need Steady to get access to Steady Swift? Yes, you need to buy Steady to get access to Steady Swift. Multiple time frame confluence is just seeing that on multiple time frames things just line up, right? How do you know when to aim for the open wick or the 50%? I always aim for the 50. You could factor in like this. You could risk 1% at the open and risk 1% at the 50, and that could be 2% overall. And then, you're getting paid out overall much bigger as well. But great questions, guys. Great questions. Great questions. Let's see. Is there any pairs that you guys want to look at? Here's AUD USD right now. Let's check out Forex Factory and see if we have any news. So we actually just had AUD news. Actually, no. AUD news is in about 45 minutes. So depending on how that plays out, I don't really like to trade news, but what I will show you guys is this. These are some trades we took previous weeks. And that one too. That one was crazy. That was a 1 to 45. Right now, price is broken up above. So we were in a downtrend, right? So we had a high, we had a lower high, we had a lower high, we had a lower high, and then we had our lower high. Price came up, smashed through all these things. So now we're going up. Either price is going to pull back here and go higher, or it's going to go lower and then it's going to pull back, right? So let me just delete all this. Actually, I like the way that looked. Let's just focus up here. I don't know. I was looking at this area earlier just because there's an imbalance right here. But there's news coming out, so I don't really know if I want to mess with it at this current moment. How do you determine the pairs you like to trade? How do I determine the pairs I like to trade? You got to treat your pairs like your boyfriend or your girlfriend, right? You got to take some time to study them, study their characteristics, study the way they move, study the way they pull back. Like watch how aggressive they move, how choppy they are, whether they like institutional candles better or if they prefer imbalances better. I think about this. When it comes down to you and your relationship, you know a lot about your boyfriend or girlfriend, right? You might know the side of the bed that they like to sleep on, right? It's fact of the same. You know when to give your girlfriend attention. You know when she's hot and she's mad, and you know when to stay away from her. Same thing. Like treat your currency pairs like your boyfriend or your girlfriend. Like learn about them. Know when they're most active. Know when to give them attention. Know when to stay away. You got to learn these by like back testing and understanding the way. What makes a point of interest candle valid? If it took out any liquidity prior. GPUSD, I already kind of went over that. GU, it's dropping. So it's dropping. It's already dropped pretty aggressively. We're up about 85 pips right now, which is sick. I actually had a 5 lot up here and I closed the 5 lot there, but it is what it is. Gold, USD, EA, what's point of interest, NZD CAD sell. NZD CAD sell is a trade from, I don't know who sent it. NZD CAD sell is good. Just wait. Like, it's kind of vertical. Once price breaks below this low and potentially even this low, once we see a break, it might pull back and then it should start trending down. And then, targets, right? GBP, JPY, GJ is probably dropping right now too, if I'm not mistaken. Yeah, same thing. So, GJ came into the 50% of this daily candle and now it's going down. So it'll probably come down into this area down here. Let's see. How do you determine what pairs you like to trade? I kind of just went over that. How do you determine news, which way the market goes? You don't really determine which way it's going to go unless you really understand economics. How do you determine what pairs you like to trade? I already broke that down. When you first learning and becoming aware of your mistakes, how did you fix your bad habits? You're not going to be able to fix your bad habits unless you're writing them down. So write down every trade you take. Journal your trades, right? If you see that every time you trade USD JPY you lose, then it's probably the best idea that you stay the fuck away from USD JPY. You feel me? When you first learning and become blah, blah, okay. Do you ever look at IG.com to look who's buying? No. You want to stay away from this. That's such bull. Like that's the biggest like BS in the market. Is anything that tells you there's this many buyers and this many sellers is stupid. And honestly, you should observe the masses and do the opposite regardless. So I don't look at that. I don't consider that a confirmation. If it says 99%, because the thing is it can tell you that 99% of people are buying GJ right now, and then you buy it, and then GJ will just go to hell. Like there's no like, why does that happen? Like there's no consistency behind that. Any educators you personally found really valuable? I like Mauricio and John, Chris Terry. A bunch. Yeah, I don't like cryptos either, honestly. I'm not that great at it. But yo, guys, I hope you guys have gotten some value out of this this call. I'm sorry that there's nothing really setting up at this specific moment that we could really look at. Maybe we can find something on Euro. See, the thing is the only thing that's worrying me about. See, Euro odd looks like it's about to. So let's factor this in. We've got a higher low. We've got a higher low. We have a higher low, and we have a higher low. And then we see price shift below this higher low, and then we start creating lower highs, lower high, lower high, lower high, right? As long as price can stay below this wick, Euro odd is downtrending. It's making lower low, lower low, lower low, lower low, lower low. Potentially right now, we're looking at Euro odd. If we fib up this full move, we're in a nice area right now based off of the fib, the 61.71 area. Let's look at the 4 hour. I don't really like the 4 hour. Let's look at the 3. Let's look at the 2. Let's look at the 1. Okay, let's look at the 45 minutes. Let's look at 30, 25. What I'm doing right now is I'm surfing through all of the chart, all the time frames to see which one looks the best. I think the 1 hour honestly looks the best. It looks like there's a little imbalance. So there was an imbalance here, but that's been filled. There is one right here as well. But I don't know, guys. I don't want to take the trade based around the news. I honestly don't trade news. I trade around the news. But, what I'd like to see right now is maybe we see this push up a little bit higher. As long as it doesn't go above this, we might see it go drop lower. So, there's potential on this pair to go for like, let's say 150 to maybe like 180-ish pips, but that's kind of like where I'm thinking on Euro odd. But right now, I don't really like the fact that there's so much news. Would you recommend start with an account with 1K or start low? You can start with whatever amount of money that you can afford to lose. And it's not because of the fact that you're going to lose it all, but it's because of the fact that you want to not have any emotional attachment to it. If you're going to trade a 1K account or a 500 account or whatever, just percentage-based risk reward. Know what you're risking every time. Will this video be saved on Go Live? This isn't a Go Live. How much money minimum should a beginner trader put into his account? However much you can afford to lose, bro. I kind of just answered that question for whoever that was above. But yeah, with that being said, guys, kind of wrapping up the session right now. I'd say the last thing I want to talk about is just on Go Live. You can tap in and go live. You can go to English, go live. You can scroll down to steady, and you can watch myself Sundays and Wednesdays, John Dollery Mondays and Thursdays, Mauricio's Tuesday, Wednesday, Thursday. And if you're a Spanish speaker, there's Spanish steady too. So Spanish steady, you got Mauricio, Sunday, Monday, Tuesday, and Thursday. And you got Aurelis Tuesday, Wednesday, and Fridays. So yeah, guys, with that being said, John, you still here, bro?
Yes, sir. Yes, sir.
All right, bro. Is there anything else you'd like me to talk about before we go?
Nothing much, man. Honestly, just want to say super grateful for you. Super grateful for this call, man. You dropped a shitload of value. I know everybody on the call tonight got a lot of value, and I just see the thank yous and stuff like that. So grateful for you, bro. Guys, drop some 777s in the chat for Justin, man. Drop some 777s in the chat. He doesn't have to do this, and he's super busy, but I appreciate you, G.
Appreciate you, bro.
Let's run it.
All right, love you, dog. Y'all be easy. I'll see you at the top.
Peace. Last thing I want to mention, guys, for people still on the call, just understand that it's a journey. Being involved with trading, it's overall a journey. Justin's been involved now for 4 years. It took me 4 years to almost clear $1 million with marketing. It took Justin almost 4 years to clear multiple six figures with trading. So just understand it's like you got to stay committed. You got to stay committed, right? 2 to 4 years. Entrepreneurship is a 2 to 4 year plan. Set yourself up for the next 40. Rather than going out there and trading and working the 40 plan. So we're going to post the recording after this, guys. We're going to make it unlisted. So I appreciate every single one of y'all, and I'll talk to you guys soon. Peace.